A powerful Bitcoin signal just flashed on the charts. Last time we saw this exact setup, Bitcoin doubled in less than 2 months. Now, traders quietly watch as this golden signal flickers again. But there's more beneath the surface. Wall Street legends just placed massive bets, predicting a crash, while secretive global giants silently stockpile Bitcoin behind closed doors. Meanwhile, crypto's most talked about token is heating up again, and a massive multi-billion-dollar payout is about to flood the crypto market with fresh capital. What exactly is happening behind the headlines? And how can you and I position ourselves before everyone else catches on? If you want to decode the hidden moves happening right now, hit subscribe, turn on the notification bell, and let's jump straight into it. Happy Friday, by the way. The mood in the market today is a nervous one. Traders are bracing themselves, watching closely as fear spreads quietly across Wall Street. Something unusual is unfolding. Put volumes, the bets investors place when they expect prices to fall, are suddenly surging, especially among tech stocks. Specifically, the Magnificent Seven, as it's been known. These stocks are experiencing a flood of these bearish bets, totaling over $33 million in put purchases. Remarkably, for the first time this week, bearish options, or puts, are outpacing bullish options, called calls, for these tech giants, clearly signaling investor anxiety and a belief that prices might head lower soon. And it's not just anonymous market participants getting jittery. Legendary investors and market experts are publicly voicing caution. Stephen Cohen, Paul Tudor Jones, Michael Gayed, and now Katie Stockton, all influential voices in financial markets, agree openly that we will soon revisit previous market lows. Katie Stockton from Fair Lead Strategies, appearing on CNBC, specifically calls for a fresh low relative to the market's April bottom. The repeated calls from these respected figures amplify the anxiety, leading investors to question if the current stability is about to crack. Now, I don't agree with all of their opinions, but let's continue to review their speculations. Adding fuel to the fire, Michael Burry, the investor famous from The Big Short, who accurately predicted the 2008 financial crash, made headlines again with a dramatic move. Apparently, Burry sold every single stock in his portfolio in this year's first quarter of 2025. This includes big names like Alibaba, Baidu, JD.com, and others. After clearing out his portfolio entirely, he's made only one new investment, a sizable position in Estee Lauder. Many investors wonder aloud, what does Michael Burry know? His drastic portfolio shift only deepens fears of what might be coming next for markets. But amidst this tense backdrop, Bitcoin has quietly been sending out a bullish signal, the wave trend indicator as it's called, which is a trusted tool among traders and spot momentum shifts. It highlights a potential new rally for Bitcoin. The chart clearly shows that every single time since the bottom of 2022, when Bitcoin corrects back to this particular wave trend level, it has always rebounded to hit new highs. Right now, Bitcoin sits precisely at this critical level again. Traders are carefully watching it, knowing Bitcoin could repeat history and surge upward again soon. And another key indicator supports the bullish case for Bitcoin as well. It's called the Golden Cross, and it's approaching fast. This happens when Bitcoin's short-term moving average line crosses above its long-term moving average line. Historically, this has consistently signaled large bullish moves. The last time this golden cross occurred, Bitcoin jumped from $60K all the way up to $110,000 in just 2 months. Today, traders and analysts are watching closely, anticipating history might repeat itself, and I personally think so too. Bitcoin's recent behavior follows a predictable pattern. Since the lows in April, Bitcoin moves up sharply, then settles into tight consolidation, moving sideways but with bullish strength before launching higher again. Experienced traders emphasize waiting for clear signals before jumping in. Bitcoin currently hovers around $101,000 to $105,000, poised perfectly within this consolidation pattern. Traders warn that prematurely jumping in before clear breakout signals risks unnecessary losses. But here's something unexpected. While Bitcoin builds strength, altcoins are struggling. The total altcoin market cap today is exactly the same as it was 1,500 days ago. That's over 4 years without meaningful growth. Veteran crypto investors feel the stagnation deeply, questioning if altcoins can ever return to their former glory or if Bitcoin alone will lead the next major crypto surge. So right now, we're seeing two clear stories unfold side by side. Wall Street traders and legendary investors signaling growth and anxiety about traditional markets, while Bitcoin quietly shows powerful signs of strength behind the scenes. Investors now face an important choice. Do they trust the growing chorus of caution from Wall Street? Or should we follow Bitcoin's subtle but historical powerful bullish signals? So while traditional markets show clear signs of anxiety, something remarkable happens quietly beneath the surface. So let's put that aside for a moment, okay? Because while traditional markets show clear signs of anxiety, something remarkable is happening right now quietly beneath the surface. We have powerful players worldwide continuing to load up on Bitcoin. They're not loudly announcing it, but their actions speak louder than words. First, let's look at Russia. The Russian central bank officially names Bitcoin the top performing investment asset of 2025. This declaration sends a strong message. Central banks historically prefer traditional assets like gold and government bonds. Yet here we have Russia recognizing Bitcoin openly as their strongest performer, indicating high-level institutional confidence that Bitcoin value might keep rising significantly this year and into the future. Meanwhile, in Brazil, the trend towards Bitcoin reaches a historical milestone. Milestones, a large public company, has become Brazil's very first Bitcoin Treasury company, acquiring over 274 Bitcoin, valued around $28.4 million. They proudly share their Bitcoin holdings, highlighting an impressive yield of 600% from their Bitcoin investment strategy. This is another powerful corporate endorsement of Bitcoin as a trusted store of value. In the Middle East, even bigger movements occur quietly. Abu Dhabi's sovereign wealth fund just revealed a massive purchase, spending over $500 million on Bitcoin ETFs. A sovereign wealth fund typically invests in high, secure, and stable assets. Their substantial bet on Bitcoin ETFs signals enormous institutional confidence, encouraging other large funds worldwide to follow suit. And neighboring Saudi Arabia, we know Trump was just in Saudi Arabia. Well, their bank has also taken a strategic but quieter route, investing directly in Bitcoin through Michael Saylor, his company, Strategy's shares. Strategy right now holds massive amounts of Bitcoin, effectively serving as a proxy Bitcoin investment. Now remember, by owning Strategy shares, you don't directly own Bitcoin. Saudi Arabia's central bank leveraging MSTR's shares or Strategy's shares highlights the clever ways institutions find to gain Bitcoin exposure, even when direct holdings are complex or politically sensitive. But the bullish sentiment doesn't stop in the Middle East. JP Morgan, one of the world's largest investment banks, makes a bold prediction. Bitcoin will outperform gold in the second half of 2025. This is huge. Banks historically consider gold as the ultimate safe haven asset during economic uncertainty. Yet now, JP Morgan bets Bitcoin might surpass gold, emphasizing Bitcoin's increasing status as digital gold. Even China joins this quiet global movement towards Bitcoin. Chinese public company DDC Enterprise announced a major strategic reserve purchase, planning to acquire 5,000 Bitcoin. Chinese corporate moves into Bitcoin signal shifting perspectives on crypto within the region, despite historical strict government regulations. And while these global players accumulate Bitcoin, Bitcoin's ETFs simultaneously have seen a significant surge of new money inflows. 115 million in fresh investment flows overnight. ETFs provide easy ways for large investors and institutions to gain Bitcoin exposure without holding Bitcoin directly either, similar to Strategy's MSTR's shares. All these quiet moves tell one important story clearly. Bitcoin is attracting major global institutional attention. Big institutions, governments, sovereign wealth funds, and even central banks are stockpiling Bitcoin. But why are these powerful entities making these big moves right now, even while traditional markets experience fear and uncertainty? To answer that, let's look deeper into the bigger macroeconomic picture, as well as the fascinating story unfolding around one of crypto's hottest tokens, called Hype. Inflation is finally calming down. This usually makes everyone think the Federal Reserve will soon start lower interest rates, typically encourage spending, investments, and overall market confidence. But there's a catch here. Long-term bond yields, especially the 30-year bonds globally, are unexpectedly surging. Higher long-term bond yields means borrowing money gets more expensive, making financial conditions tighter for everyone, even if inflation is lower. This unusual situation puts investors into a tough spot, unsure whether to celebrate lower inflation or brace for tighter financial conditions. Interestingly, even with rising yields, the economy shows unexpected strength. The Atlanta Fed projects real GDP growth of 2.5% for the second quarter of this year. This contradiction confuses investors who wonder if the market is truly strong enough to handle rising interest costs or if something else might be giving way soon. But let's zoom in on crypto right now. There's one token that's quickly drawing attention again: Hype. Just look at its open interest, or its OI. This measures how much money investors currently have riding on future price moves. Hype's OI shot up from a modest 3 million to a stunning 45 million in a short period, clearly signaling investor confidence is surging again. And why are investors suddenly bullish again? It's the unique setup behind Hyperliquid, the exchange supporting Hype. Here's how it works simply. Every day, Hyperliquid permanently removes or burns 50% of all the fees it collected, which consistently reduce the available supply of Hype tokens. With fewer tokens available, each remaining token becomes inherently more valuable. On top of this, investors are staking their Hype tokens too, locking them up, further reducing available supply and driving even more scarcity. This creates a powerful flywheel cycle effect. More activity on the exchange means fewer tokens available, driving demand and boosting value. But let's clearly outline what's already happened since the Hype token first appeared. Hyperliquid Exchange saw explosive growth, quickly reaching over 5,000 ETH, or 18 million in total value locked, TVL. A clear sign investors trust and are actively using the platform, which is critical. The exchange rapidly has attracted significant trading volume, even surpassing major competitors. Critically, Hyperliquid has remained secure and stable, even as other crypto platforms have experienced security issues, which has boosted investor confidence and trust towards Hyperliquid. All these milestones have enforced or reinforced investors' belief in Hype's long-term potential. And finally, there's one more massive event about to unfold. FTX is scheduled to distribute over $5 billion to creditors on May 30th. So imagine billions of dollars suddenly flowing back to creditors, many of whom might reinvest this money directly into crypto tokens. This huge liquidity boost could lift crypto markets higher, precisely at a time when uncertainty peaks in traditional markets, which in itself turns investors towards more risk on asset types like Bitcoin and potentially the crypto market. So while Wall Street panics and institutions quietly load up on Bitcoin, powerful macro forces and innovative crypto tokens like Hype show that beneath the surface, excitement shifts are underway. Investors who spot these early signs by keeping up with the news have a unique advantage. The message here is clear. Market chaos often brings opportunities for those who stay focused, pay attention, and act decisively. Staying informed is your edge. If you want to spot opportunities early and always be ahead of the curve, smash the subscribe button, turn on the notification bell, and join me every day. Let's tackle these crypto markets together. Stay safe, guys. Stay fit and healthy. I just came back from the gym and it has had, and it always has, a huge effect on my mood. So I'd encourage you to do the same. I love you very much. And remember that besides all of this macro fears and, FTX distributions, that's all the weather, okay? Fundamentally, there's only so many Bitcoin ever to be created in existence, which means Bitcoin's only gonna go up in value, which means all you need to really do is hold Bitcoin. That's it, okay? Simple formula for winning. I love you, and I'll catch you in my video on Monday. Have a happy and wonderful weekend. Ciao.